Bismillah, alhamdulillah, wassalatu wassalamu ala rasulullah. Welcome to Islamic Finance Podcast with me, Almir, and Miriam. Welcome back. All good? What's happening?
Just finishing exams.
Again, more exams?
Yeah, I have exams every 4 weeks.
4 weeks. Those weeks are going very, very quickly. Before we start, as you know, we invite you for simultaneous sip of the day, the best part of the week, in 3, 2, 1. Bismillah. Bit hot? Yeah. You made it well, but bit hot. Huh?
Yeah.
Okay, so it's been an interesting start of the year. Lots of things. We started just before the end of the last year talking about big tech and freedom of contract. And we talked about, if you remember, how there was an antitrust case against Facebook and for buying Instagram and WhatsApp. And then little did we know last week, Trump was banned from Twitter and several other big platforms. Today I read Telegram has gained in last 72 hours 25 million new subscribers. And it's now 500 million subscribers.
I've been using Telegram for 2 years. And just recently when they said that there's 500 million users, I was thinking maybe Facebook should have bought them too, because that's a lot of people.
There has been
influx
yeah.
of everyone. Because I study in Turkey and we use WhatsApp as our primary medium of communication. But a lot of people are not continuing the use of WhatsApp in Turkey because of the situation. And everything moved to Telegram, sorry. Everything moved to Telegram. Universities, teachers, students, everything.
There is a Turkish kind of app, Bir or something, not sure what's called. Somebody was telling me you should switch to that. It's been exodus from WhatsApp due to these recent changes. Is that justified fear, what people are saying? Because looks to me that Facebook is mainly trying to integrate these two services in order to provide what probably will be some kind of a business solution. Because now if you go to Facebook, you can message people on the WhatsApp from the Facebook. So if you want to buy, let's say, something from that website, you can send them the message. They can respond. And I think still messages are encrypted. There was some issue about when it's stored on the cloud, whether that is encrypted. It looks like it's not. But I don't think that they can read or that necessarily WhatsApp is any more or less vulnerable than the others. But there is something vibe coming out of Facebook that I think people are
not a fan of.
Not big fans. They sense the vibe change and then people respond.
See you later.
In a similar way, I was talking last time about how a lot of political right-wing conservatives were now creating their own platforms. And just a couple of days ago, this conservative platform headed by Ben Shapiro and few others, they released a movie with their own values. And I was listening. There was a program called Backstage where they were commenting about conservative entertainment and all of these things. And they were saying, why give money to Netflix, to Google, to Apple, when you could give money to your own organizations and they would produce a content that does not hate on you. And as they were talking about that, I was thinking the same thing. Like there is that battleground you can see between how do you impact the culture. You want to have ability to create your own products. Specifically, if I bring this all back to Islamic economy, I need a WhatsApp, I need a satellite, I need a drone, I need a supercomputer. I have capacity, I have people, I have brain power, I have finance. I think that's a very strong position to be in. So in today's topic, I was thinking that we continue with the freedom of contract. I think I still have one episode I want to deal with certain questions, but because there was some discussion that were happening in the last week, I wanted just to reflect on them. And I have maybe 1 or 2 topics in mind about this Ribawi transaction. So we are talking this season, second season, about contract. Although I explained riba and we went through the rules and everything, I feel that it needs some case studies how these rules are misused or misunderstood currently. So in today's podcast, I'll talk a little bit about Ribawi transactions. What are these? And I will use specifically for today, I will pick student loans as an example. For next week, I might use what I've seen also similar discussion about home loans, conventional home loans, and also insurance. We'll see anyway for next week. So what is Ribawi transaction? It is exchange of these specific items that are subject to the rules of riba. And if you remember, we have money and those other staple goods, like a date, salt, and so on. Violating those rules, if you remember, regarding exchange, leads to unlawful gain or increase, which we call riba. Here we will talk specifically profit or increase. We will not talk about riba and nasiya in terms of delay. We will talk specifically increasing like a fadl or profit or whatever we want to call it. Now, the common denominator in all Ribawi transactions. So these are Ribawi goods. And when we exchange them, we have these sort of transactions. So when we talk only specifically money in terms of surplus, what is the common denominator in these Ribawi monetary transactions when it comes to unlawful surplus is unequal exchange of money for money on the spot or on deferred payment base. So we talk about when exchanging same for same money or monetary item asset, there should be no increase or decrease of one over another. For instance, exchanging $100 for 120, whether on the spot or in the future, is example of such impermissible transaction due to unlawful gain. 100 for 120, it's not one-to-one. There is a difference. And what is the basis of this? Prophet ﷺ said, gold for gold, weight for weight, like for like, and silver for silver, weight for weight, like for like. Whoever gives more or takes more has engaged in riba. So gold for gold needs to be same for same. Whoever gives more or takes more, this is riba. So it's very simple, gold for gold. And this is why we stress Ribawi transaction is money for money. So if we can see money for money, what is the first thing we need to do is think, is this money for money? Am I giving or taking more? That is a simple rule of thumb. And this is Sunnah and Nasai. In another hadith in Sahih Muslim, it says, do not sell gold for gold, except like for like, and don't increase something of it upon something. Al-Bukhari narrates that Messenger of Allah ﷺ said, the bartering of gold for gold is riba, except if it is from hand to hand and equal in amount. In this hadith, when we analyze transaction, we don't look at a derivative or a name or a title we give it. We look at the most intrinsic, simple breakdown of transaction. What is the core here? It says here gold for gold. So is it today money for money? That's what we're talking about, Ribawi transaction. And then we can simply say, was there an increase here or not? Any transaction you can bring down to this level of simplicity, simplified. Derivatives, complex financial engineered products, any crazy convoluted financial transaction or instrument, you can bring it down to this very simple thing. What is being exchanged? I'm giving you this, what are you giving me back? If both are money for money, then we cannot have uneven exchange. So rule here is that all money for money or equivalent transactions must be exchanged at par. That means at one-to-one. Ownership of $100 cannot be exchanged for ownership of more money. So I start with owning 100. I cannot change the ownership of that for other money different in value, because the rules of riba would apply. In a similar way, anything of monetary assets such as cash, debt, any kind of cash flow, exchange for similar monetary assets of the same currency, any profit from such transaction will be illegitimate gain or riba. So if we look now at specific example that I want to talk to you about, I've been asked to write for one scholarly body in UK to have a look at this student loan. So we had a discussion among the group of colleagues and friends about what is student loan in UK specifically. We had a very intense discussion, and now we're writing like a paper. So we are still finalizing the paper, but I just put some preliminary points. Maybe I'll later on make more, maybe videos about it. But where is discussion now? And what am I noticing here? I'm noticing here a very interesting trend, which is why I'm talking about this, which is that there is a trend where we are saying that we look at the form, we look at the substance of transaction and not the form. But there is this trend that this so-called nuanced approach leads to making new names for the transactions and ignoring the substance. So what do I mean? So you have this student loan. People say, don't worry about the name, that it says student loan, that it creates a debt, and then you have to pay interest on that. So I said, don't worry about it. Then they said, because the substance of it is something else. All right, so what is the substance, I asked. So they say several opinions. So now I will come to the sort of unify these opinions into several categories. So some say a reality of this is that it is some sort of partnership or equity, or somebody is sharing in someone's income, profit. Okay? So all of these are saying it's not really money for money, but when the government or the student loan company give, let's say, £30,000 to the student, what they are doing is some say they are like partnering with them in their income, in their work, in their profit. Just like you would buy shares in a company, for example. And then whatever they make, you get, or you as a mudarib, you go with somebody and then, whatever work they make some work for you. You make some profit from them. Or some say the way we look at it, that it is new kind of partnership, even didn't exist before. And in this partnership, whatever you are upskilled, they give you money to upskill you. And then because you have these new skills, through this taxation system, you repay that. And it's in reality like some kind of a graduate tax. And this graduate tax is taxing your work, taking some of your work that you earning now because of that degree. All of these, in essence, what they are saying, graduate tax, partner, mudarib, income share, what they are in essence saying, it's equity relationship, meaning when government gives this money, they are not giving you quote-unquote loan, meaning money for money. They actually got ownership of something else, your work, your future income, your share in whatever you are making, and so on. And they say to show you that it's actually all of this is true, the debt is cancelled anyway after 30 years. So to show that this is actually some kind of a partnership or sharing agreement or something like that, the debt is cancelled after 30 years. So here we have to ask ourselves, how do we know and analyze this to see if this is really partnership of sort, equity type, or a debt-based or Ribawi-based money for money? And I'll give you a very simple example. When you buy shares in a company versus when you buy corporate bond. When you buy share in a company, you are shareholders. You change your money for ownership of what?
Part of the company.
Part of the company. So you became owner of tangible asset, very specific asset, which is, let's say, 5% shares in Amazon. So we know what you are getting. So that exchange is money for equity, money for ownership of the company. When you are getting dividends, profit, you are not getting then money for money, because your money for money is broken by change of ownership, meaning your ownership of money became equity. Now you are getting money from equity. So your equity is what is deriving you profit. You are shareholder. You are holding shares and ownership in the company. So originally you had money, you bought shares, you became shareholder. And then those shareholders entitled you for the profit. In a similar way, when you are partnering in anything, you buy something. So we need to ask ourselves, what do we buy when it comes to the student? What sort of work? How do we quantify that? First thing to notice here is that profit that is shared from the student, so-called profit, okay, in this transaction, actually come from all taxable income that they are making. So they are having the work that will be taxed. If they have a sufficient saving, part of the interest from the saving will be taken. Income from shares, dividend, that will be also taken. So first thing we see is that they are taking profit from anything, any kind of income that is being generated. Now the issue here is that even if that money is coming just from the salary, there is a difference between you are securitizing income, buying a cash flow, part of the cash flow, and you are deriving your profit from the equity. So let me make a couple of steps back. So when you, as a shareholder of the company, gain a profit, that is 5% from underlying economic activity in exchange for you being the owner of the shares, right? But if you went and you said, I will buy that cash flow, any cash flow, I will give you $100,000 for 10% of income, of your income. What am I then buying? Let's say I don't know the income. I don't know even the profit in the company. Okay? But if I say to you, I'm going to buy 10% of your income, what is the subject matter in that contract when I'm buying income from you?
Income.
So what is the income? Subject matter of income is money. So subject matter is 10% of money. Right? So the difference is here. If I buy 10% of the company and I am getting 10% of the income, that is equity ownership for that money that I get as a partner.
Yeah.
I'm sharing in the profit. But if I say, I will give you $100,000, I'm not going to become shareholder or anything. I'm just going to give you $100,000 in exchange for 10% of your income. So now what I'm buying share of money pool, future money pool. So now the contract becomes money that I'm giving you against not an equity, but against a cash money flow. So in this case, this exchange is Ribawi transaction. In this case of a student loan, it's very clear that they're buying into every possible income stream. If you also look at this way, if I'm buying corporate bond, I'm giving company a loan and they're giving me money back. So this kind of thinking would tell us that, hang on a minute, there is no difference between bond and the shares. Yeah. Because they would say that substance really, beyond the form of bond versus equity, would be that this all comes from the profit of the company, and therefore you are like a shareholder. Bondholder and shareholder are the same. That's how they would think, reason. They would say, forget it's called bond, it's a debt, it's a loan, whatever. They would say it's a new form of financing, very nuanced. Don't worry about form. Look at what it is, what's trying to do, which is, as a result of what you're doing, business is getting more profit, and therefore it entitles you for that, which is like a profit. So you and shareholders are similar. And that is the essence of this argument, that it misses the main point, which is equity transaction in the first case, is money for equity, and due to ownership of the company itself, you are deriving 10%. Versus when you give a loan, money for money. When you give a loan in form of the bond, then that profit is a riba. Yeah. Yes, it comes from business activity, just like any loan. Where it's going to come? From some business. Doesn't mean we are now partner in that business. Here, the terms, conventional terms like loan, debt, and interest actually accurately describe Ribawi nature of the student loan. It's not based on the terms used in the contract only. It's on the substance of the transaction. In case of student loan, money for money captures the essence of this transaction. And that's why the Prophet ﷺ, and you see, when he said gold for gold, we see that this sentence reduced transaction to the most simple form from which we are able to establish the most fundamental truth about the substance on what seems to be the complex or innovative new way of contracting. It is at this level that we look if a rule, whoever gives more or takes more has engaged in riba. We look from that point of view, whether it's money for money, whether that rule applies or not. If we look at this transaction or any transaction from any higher level, we bring level of abstraction and we cloud that reality. This way of judging was best demonstrated in another hadith. You probably remember when Bilal brought some barley dates to the Prophet ﷺ, and the Prophet ﷺ asked him, "From where have you brought these, Bilal?" Bilal replied, "I had some inferior types of dates and exchanged 2 sa of it for 1 sa of barley dates." So he had 2 quantity, like 6 kilo, for example, and then he exchanged it for 3 kilo of different dates in order to give it to the Prophet ﷺ to eat. Thereupon the Prophet ﷺ said, beware, beware, this is definitely riba. And then he again said, this is definitely riba. Don't do so, but if you want to buy superior kinds of dates, sell the inferior dates for money and then buy superior kinds of date with that money. What do you see in this situation?
In the transaction, it was 2 types of dates, which is the same thing. One was exchanged for a lesser quantity of the other. And that would be, for example, if it was exchanging like $6 for $3. But it was dates in this case. Whereas in the other one, a legitimate economic activity occurs. Where you sell something, you get money, you hold the money, and then you go and you buy the dates that you want.
So this show a situation where dates for dates transaction 2 sa for 1 sa was termed as riba. Because what? Exchange ratio was
2 for 1.
So alternative was then suggested, that 2-step solution involved 2 non-ribawi transaction, meaning dates for money and then money for dates.
Yeah.
So you sell these for money and then take that money for the different dates. And this is why, because money for dates now, they are not same for same, they don't require same one-to-one exchange. What we need to notice is that conclusion will probably be the same. So those people who say, well, look, conclusion and reason for this and intention of this is this and that, they're missing the point. Issue is not conclusion and intention here. Because here, what is Bilal trying to do? He gave a gift. He was not forced. He wants to do most beautiful thing. But underlying transaction is same for same of ribawi goods, and it's not one-to-one. Since it is likely that the end conclusion in both riba and non-riba transactions would lead to similar outcomes, judgment about riba was focused on what was exchanged instead of an intention or amount of benefit extracted from it. If we could impose our own reality on these transactions by retrospectively labeling them with legitimate trade-based term, so if we could just call these transactions, riba transaction, some legitimate names of trade-based terminology, then the Prophet ﷺ would not override Bilal radiallahu anhu and his transaction, and he wouldn't describe it as riba. He would simply say, no, Bilal had this intention. It's really what it is. And, don't worry about it. It's whatever. Especially because it was a gift. So in fact, judging transaction on a basis of external appearance is what led some people in the past to conclude that trade is just like riba. So judging this on how it looks like and similarities and how much money is making and things like that. Not looking, is it money for money? And the verse in Quran says about them that they used to say trade is just like usury. And then it continues to correct this by saying that Allah has permitted trade and forbidden usury. Or in simple terms, Allah has permitted gains from money for assets. And they are legitimate. This is a trade. And then Allah has forbade riba or gain that is derived for, let's say, money for money, even if these two look similar to our observation. So back to our transaction. So we have a very simple situation. Student enrolls into the course and he enters into service for fee transaction with the university. Then they send invoice to him. This creates a fixed debt on a student. Now, to avoid the consequences of not paying for the fees, university offers several ways of and methods of paying for these tuition fees. One of the university I found, for example, University of Westminster, for instance, offer a debt settlement by bank transfer, online by card, PayPal, by phone, via sponsor, like your work, or student loan company. There are two categories. One is directly payment by student with all these mechanisms, or transfer that existing student debt to either sponsor or a loan company. Therefore, the student loan, which doesn't go just for the studies, but even for the living expenses. And this is another issue. So the student loan is one of the ways the students pay for tuition fees by way of what? Transferring debt to a student loan company. So the loan began when a student is enrolled and fees are invoiced, obviously, to the student, his fees, and then they are also sent to the student loan company. And one of the University of Westminster explained these steps, says you must complete full enrollment at university to allow your registration to be confirmed. And then they talk about once you have confirmed your enrollment to the SLC, student loan company, you should expect your loan to be paid into your account within 3 to 5 working days. And should the student become ineligible for a loan, in such case, students will be liable for any unpaid tuition fees. So this effectively, what it does, transfers liability for debt from a student to the loan company, and this is what we call hawala, or debt transfer takes place by advancing loan to offset fees, and then debt is assumed by student loan companies. With the transaction of hawala with underlying debt concluded, the repayment of a debtor to the transferee is now based on repayment terms that are more than the amount of the debt, which is riba. Now, any income share that is connected to hawala agreement cannot profit from it. So it is not permissible to share income or create a profit incentives for this kind of hawala or loan or any kind of similar arrangement. You understand that? Even if we speculate that student loan is some sort of equity arrangement that buys into students' career repayment method from securitized income stream when we buy that income stream, including from saving interest, pensions, or shares and dividends, show the true Ribawi nature of this arrangement. In a similar way, cancellation of debt after 30 years, and that's for students who earn below certain income. Poor guy, after 30 years, he can't pay. Okay. Most of the people above certain income, they pay double. But in any case, for those poor guys, they can't pay. They cancel the debt. And this is what confuse people, that because for some is cancelled and they get stuck with the output of the transaction. They emphasize that this is for the low income earners is very good outcome, meaning financial terms outcome. But we're not talking about financial terms. Remember, we said, is it trade or is it riba? Don't worry about, they look the same. That's the main problem in looking at it like that. So this cancellation of debt, which is even in Islam, you see, just because I cancel debt on someone doesn't mean that that was not a loan between us. It's not a partnership, yeah? So this cancellation on compassionate ground does not alter intrinsic nature of transaction. Threshold in repayment as well. So this threshold does not alter what is in essence a debt relation between lender and student. Just like, for example, you have nisab for zakat, it doesn't mean now it's a partnership. Renaming these transactions with words like income share or similar does not change this intrinsic nature of the transaction itself. If one is to assume that the object of the transaction was to share in income, they would have to show that income is being derived due to the underlying ownership or equity in specific income generating asset. You understand? If you are saying this is income sharing or some kind of equity partnership, whatever, you need to show that these people were actually buying into something, some underlying income generating asset class. There is none of that. But in actual terms, share does not point to equity arrangement, but rather a debt instrument where loan repayment represents share in the income from securitization or a sale of the future cash flow from various types of taxable income. Money Saving Expert website explained that for repayment purposes, income include any additional income from saving, interest, pension, or shares and dividends, which will be also repaid at 9%. With the treatment of taxable income as a cash equivalent asset class, because that's what it is. Taxable income is a cash flow. It's a cash equivalent asset class. All the rules of riba apply on this repayment mechanism. There's a loan, there's a debt, whatever you want to call it. There's money advanced, whether you want to call it as a hawala, debt transfer, or a straight-up loan to offset the debt, or whatever you want to call it. That's money was advanced to you. And you are repaying it from cash equivalent asset class without any underlying ownership in any equity. Okay? So this points to the true substance of a student loan, where even interest from a saving account is used to repay ever-increasing debt. And that debt is growing, yeah? Compounding. That's why I can reach. Somebody take 50,000, they can repay 100. So even if the entire arrangement was a simple loan for student fees, transforming liquid monetary assets into flexible and forgiving repayment methods does not change the substance or true operational reality of Ribawi debt instrument. Another point, if a student loan was a non-debt-based transaction, we also would have no voluntary repayment options. If this is you partnering in somebody's work, what is there to repay early? If I buy shares in a company or in a project, what is there to repay early? There shouldn't be debt between us. The debt shouldn't be then increasing, compounding. There shouldn't be outstanding amount. The fact that there is early repayment and that something is forgiven after, you see, they're saying, oh, after 30 years, this is forgiven. Well, that fact that something is forgiven shows that there is a debt. It was not equity. So that argument kills its own legs that it stands on. So this forgiveness of the debt is the proof this is a debt. So regardless of debt being overpaid or underpaid, because they sometimes say, oh, it's not fully repaid for some categories. But that misses the point. Whether you are compounding or discounting a debt in a loan, it goes against the core that in gold for gold or money for money, exchange must be in equal amounts. And therefore, any money for money transaction at other than par is considered riba. So in simple terms, nothing else we can see in this transaction. No operational reality, no sharing anything except here's the money, Mr. Student, for your studies, to pay your fees. You will repay us this much. Of course, you don't have money, but we'll take from the more secure way, which is from your taxable income and from everything that you are earning. Very simple transaction. Yes, might have some charitable points. And even if it is at the end with a nice intention and needed, these are all different points. Just as Hadith of Bilal explained to us. What we are concerned most is not how these things are looking on the outside or intention, but what is the underlying mechanism used to finance this student. And in this case, it's simple money for more money or money for unequal. It's not a Kar Hassan charity loan one-to-one. So this is 100% Ribawi transaction. No sign of anybody buying into any kind of equity or partnering or anything like that. That has to ignore all of the reality. Anyway, that's it for now. We don't want to take too much longer. We'll continue this analysis. We are also now on Telegram. Join us. There will be a link down somewhere. Join us so you can be updated with the latest episode and other things so that you can share maybe clips, maybe other things. We inshallah hope to see you next week. Take care of yourself. Assalamu alaikum.